Welcome back. I'm Majid, and this is Financial Crime Awareness Hub. Here's a question that sounds simple, but it's actually one of the most important and tested distinction in the CAMS exam. What's the difference between tax evasion and tax avoidance? So most people have general sense. One is legal, one is not. But the CAMS exam doesn't test you generally on this kind of a common sense or very basic level. It puts you in a scenario and asks you to identify which one you are looking at. And that requires knowingly, what exactly you're looking for and where within the lines, what are the keywords, what are the red flags. And this is exactly what we are covering today. Let us get into it and I'll walk you through every single concept. Before I give you any definitions, I want to show you two scenarios side by side and ask you which one is the crime. So let's look at scenario A. A multinational corporation establishes a subsidiary in Ireland. It moves its intellectual property to that subsidiary. Royalties are paid from operating companies, which is in high tax countries, to the Irish subsidiary. The structure is fully disclosed to all relevant tax authorities. The arrangement, comply with local tax law in every jurisdiction. Let's look at it now, scenario B. Scenario B is like where a business owner routes, company revenue through a shell company. And we'll see that exactly what shell company is. It's a zero tax jurisdiction. The shell company has no employees. It's just on the paper. So no office, no operations. The arrangement is not disclosed to the home country tax authorities. Invoices for non-existent services are raised between related entities to justify the transfer. Okay. So what do you think? What actually two scenarios tells us? Which one is tax evasion and which one is tax avoidance? Okay, so scenario A, it's a tax avoidance. It's legal, it's disclosed, it's a genuine substance. Okay, regulators and tax authorities might not love it, but they cannot prosecute it. Scenario B is a tax evasion. It's crime, it's concealed, and there's no substance. So fraudulent documentation is also involved. And this is FATF, a predicate offence actually. The difference between the two is not the outcome. Both results in less, tax paid. However, the difference is how they get there. And that is exactly what CAMS exam tests you on. Let's look into a real case which happened for the UBS in the past. Imagine you are a wealthy American, you have made a lot of money and you do not want to pay tax on all of it. Someone at a Swiss bank called UBS and called you shortly. They say, we have a solution. Move your money to Switzerland. We have a solution for you. So what will happen? We'll open a secret account for you. The Swiss government, has very strict banking secrecy laws. Your home country will never knew it exists. Sounds good, right? So you do it. You move millions of dollars to a secret Swiss account. You do not tell the IRS, the American tax authority. You do not declare it on your tax return. As far as the American government is concerned, that money does not exist. And for years it worked. Nobody finds it out. Now, here is the game. It's getting interesting. UBS, was not just passively holding those accounts. UBS bankers were flying to the US to recruit wealthy clients. They were carrying encrypted laptops even, specifically so that no records would be created at clients' meeting. They were deliberately engineering the entire arrangement to stay hidden. This was not a bank accidentally holding secret accounts. This was bank actively helping 17,000 Americans commit tax evasion. Then in 2007, a UBS banker turned as a whistleblower, and I'm sure most of you know what is a whistleblower. And just to give you just one simple definition, a person who reports any malpractice, anything that he sees something is wrong, but you can say his name is not declared generally when they whistleblow. His name was actually Bradley. He walked into the US Department of Justice and told them everything. Suddenly, the entire scheme unraveled. In 2009, UBS paid USD 780 million in fines to the US government. And then something happened that nobody thought was possible. The US government pressured Switzerland to hand over the names of the American account holders. So what happened then? Switzerland, the country that had maintained that strict banking secrecy for decades, agreed. Approximately 4,450 American accounts holders were identified in one move. So Swiss bank secrecy, as in like a tax evasion tool, was efficiently finished. Okay. Now, why does this matter for you as a compliance professional? 3 lessons from the UBS case. Lesson 1: the bank was the vehicle. Okay, UBS did not just process transactions; it actively recruited clients and structured the concealment. The bank became a criminal instrument. When a bank crosses that line, it does not justify, or it doesn't just, face fines. It faces prosecutions. Lesson 2: banking secrecy is not a defense. Swiss law protected those accounts under local jurisdictions, but US law applied because US citizens were involved and US dollars were moving from one country to another country, and jurisdiction follows the person and the currency, not the location of the bank. Lesson 3: the bankers face personal consequences. This is one element that should matter most to everyone watching and listening now. The UBS bankers who helped client hide money did not just create liability for the bank. Some of them were personally prosecuted. Bradley himself, the whistleblower, served prison time because he had participated in the scheme before turning himself in. The one line to remember from this case, I would say, is that the funds in those Swiss accounts were criminal proceeds of tax evasion. UBS had AML obligations. It ignored them, and it paid one of the largest fine in the banking history as a result. So again, lessons learned for all of us as a compliance professionals: when a customer is hiding assets from tax authorities, that is not a tax department responsibility or a problem. These are the criminal proceeds, and that makes it our problem. The other thing, if you remember now, every institution is asking for the CRS. Okay, so CRS is also one of the key things that such case happened in the past. Let's look at further in the key distinctions how we can identify such things. Now let me give you something very practical, a simple way to look at any scenario the exam puts you in, and immediately you know whether you are dealing with avoidance or evasion. There are 3 questions that we need to think of and apply them in order. First, was it disclosed? Did the person tell their tax authorities about this arrangement? If yes, that is a good sign. If no, stop there. Non-disclosure alone is enough to indicate evasion. You do not need to dig further. Second, does the structure have genuine economic substance? Is there a real company with real employees doing real work in that jurisdiction, or is it just a name on a piece of a paper in an offshore location with no activity whatsoever? Real substance points to avoidance. A shell with nothing inside, it points out to evasion. Third thing, does it comply with the law in every jurisdiction involved? Tax avoidance can be aggressive. It can be something governments wants to shut down. The media might call it unfair, but if it is legal, it is avoidance. The moment it crosses into breaking the law, misrepresenting income, creating any false invoices, hiding assets, that comes into the category of evasion. Here's another important thing about these three tests. You do not need all three to fail. If even one of them fails, you are most likely looking at evasion. A structure that is legal but completely undisclosed is still evasion. A structure that is disclosed but has no economic substance is still suspicious and warrants investigations. Use these three tests as your checklist every time. Let's look into the next thing, why this is an AML issue. Now, I want to address something that comes up a lot in compliance teams. Someone spots indicators of tax evasion and says this is tax issue, let the tax departments handle it. I'm an AML professional, not a tax investigator. That thinking is wrong, and it can get you into serious trouble. Here's why this is absolutely your problem. FATF recommendation 3 includes tax crime in designated categories of predicate offence. That means the moment a customer evades tax, those funds become criminal proceeds. And criminal proceeds flowing through your institutions trigger the same AML obligation as a drug money, fraud proceeds, or any other financial crime. There's no carve out of tax for tax. There is no handoff to another department. You have to deal with that. It lands on your desk actually. Think about what that matters practically. If a customer is hiding income which is offshore and moving those funds through your bank, you are handling criminal proceeds, right? You need to assess the risk, investigate the indicators, and consider filing an STR. Full stop. The next thing is the source of funds or source of wealth. So your first line of defense here is the source of funds and source of wealth. When a customer has significant offshore holdings that do not match their declared income, that is your trigger for enhanced due diligence. And here's something worth remembering. Undisclosed offshore structures with no economic substance are not just tax red flags. They are AML red flags at exactly the same time. The UBS case, also taught us something important about the professionals who sit around these arrangements. For them, we call them, what was the word? I forgot. With lawyers, accountants, wealth managers, and gatekeepers. Yeah, I remember the word gatekeepers. We call them gatekeepers. Yeah, and bankers who help clients structure tax evasion. They are DNFBPs under FATF. They carry their own AML obligations, and when they cross the line from advising to actively enabling, as some UBS bankers did, they do not just create liability for their institution. They face also personal criminal prosecution. Finally, as I mentioned earlier, CRS. The CRS has changed everything then. Over 100 countries now automatically share financial account information with each other every year. The days of hiding money in a Swiss account and never telling your country are largely over. The CAMS exam expects you to know CRS exists and understand what it does. It is the most significant development in international tax enforcement in a generation. Let's now look at some red flags that is related to tax evasion. Let me take you through the red flags you need to watch for. These are indicators that appear in real cases and in the CAMS exam scenarios as well. And as a compliance professional, knowing these is what separates a good review from a missed one. Okay, so the first one, shell companies. Okay, shell companies with no economic substance, offshore entities with no employees, no office, and no genuine operations, existing only to hold assets or root funds. Second, undisclosed offshore accounts or structures. A customer who reveals offshore assets only when directly questioned, or whose declared assets do not match account activity or lifestyle. Third, Invoices for non-existent or unverifiable services, like intercompany invoices for consultancy, management fees, or intellectual property royalties with no evidence the services were actually provided. Fourth, income inconsistent with declared tax position. A customer whose lifestyle, assets, or transaction volume significantly exceeds what their declared income or tax filing would support. Next is complex multi-jurisdictional structure without a clear business purpose. Multiple offshore entities across different jurisdictions with no commercial rationale beyond minimizing the tax. Next is customer reluctance to provide tax residency information, refusing or delaying provisions of tax identification numbers, CRS, self-certification, or country of tax residence. If someone does not want to tell you where they pay tax, this is also one of the key signals for you. Next is sudden movement of assets following regulatory announcement. Moving funds after the announcement of a new tax information exchange agreements or CRS implementation. This is a classic indicator that the motivation is evasion, not legitimate planning of the tax. Next is professional intermediaries structuring the arrangements, where a lawyer or accountant is handling all the documentation and client has no direct involvement. The intermediary may be creating the concealment structure on behalf of the client. Now, let's look at I try to put a question and I'll ask you so that you can then answer that particular exam type of a question. Now, let's look at the question. A high net worth individual uses a legal offshore trust to shelter income from taxation. However, the same individual fails to report rental income from a property held in the trust to their local tax authorities. Which of the following statements best describes the tax behavior in this scenario? There are two options that you have to select out of 5. Option A, legal tax avoidance through offshore structuring. Option B, tax evasion due to non-disclosure of rental income. Aggressive tax avoidance through trust manipulation. Legitimate tax planning under CRS. Predicate offence for money laundering. I want you to pause for a moment, read question carefully, look at the possible red flags. You can drop the comments and then go for the next slide or this next section where I will explain you what are the right options and why they are right. Now let's look at the right and wrong answers. Option A and B are correct, while C, D and E are wrong. Let me put it in a story way so that let's make it easier. Imagine a person named Ken. He's a wealthy person. He sets up an offshore trust to pay less tax. That is perfectly legal, right? Governments allow it. Millions of wealthy people do this. So far, no problem. But then inside that trust, there's a property generating rental income, and Ken does not tell his local tax authorities about it. He keeps it hidden. This is where the crime happens. So, identify the two behaviors separately. Behavior 1, like the trust, it's legal, it's allowed. This is tax avoidance, which is option A. Behavior 2, hiding the rental income. It's criminal offense, not allowed. This is tax evasion, which is answer B. So 2 behaviors, 2 answers, A and B. Now let's look at eliminate the wrong options one by one. C says, aggressive trust manipulation, but nobody manipulated the trust here, right? The question says it is legal. So C is describing the wrong thing entirely. Eliminate it. Option D says legitimate tax planning under CRS. CRS is a global agreement, where countries share financial information automatically, so people cannot hide their money in the offshore accounts. Ken is hiding money. That is the opposite of CRS compliance. Eliminate that as well. Option E says, predicate offense for money laundering. Now, This one sounds tempting because we know tax evasion is a FATF predicate offense, but think about it in this way. The question asks what CAN is doing, not what the law calls it afterwards. B already tells you what he is doing, hiding income, right? E is just the legal consequence of B. It is what happens after the evasion, not a separate behavior. So eliminate that as well. So the one one important thing that you need to again remember, the trust is legal, that is A. The hidden rental income was the problem, that is option B. So same person, same trust, two different things, both must be identified. So in the exam, you just need to remember that a legal structure does not make everything inside it legal. Always assess each element of the scenario separately, not the scenario as a whole. Let's look at the next thing, the exam rules and what you need to remember. So before we wrap up, 4 things I want you to take away from this video. First, avoidance is legal. Disclosed, it should be genuine substance, complies with the law everywhere. You may not like it. Governments may want to close the loopholes, but it is not a crime. Second, evasion is criminal. It's concealed, no substance. It's a fraudulent documentation. It has FATF predicate offense and the proceeds are criminal. Third thing, the 3 tests that we discussed earlier, which is disclosure, economic substance, and legality. Apply them to every scenario. If the answer to any one is no, you are looking at evasion. The 4th thing, the AML obligations. It's clear and direct. When a customer evades tax and route those proceeds through your institutions, you have the same obligation as you would for any other crime. Okay, investigate it, assess it, file an STR if there are any grounds for suspicion. It is not the tax department matter, it is you as a compliance professionals. Last but not the least, we at Advice Tube provide many different approaches to working professionals, such as practice questions, which is most important thing. You cannot simply just read the study guide and simply go and show up in the exam. You have to practice the questions because that's where your accuracy of reading the questions, identifying red flags, reading the questions much quicker, so it will enhance all these factors. Second thing, what we have is the notes, which I have prepared, for all those who are busy working professionals. These are short notes, however, the information is condensed in it. Okay, the third thing is we have also designed a course which is deployed on a course box. It's a third-party tool. It's an e-learning which covers entire study guide. Again, crisp information, which particular information you need to remember for the exam. You need to understand the concepts. Everything is covered. The best part is that there's a bot which is purely trained on CAMS exam material and different websites that are purely needed, such as Wolfsburg. So all these things, whenever then you are attending this e-learning, you don't need any trainer around you. You don't need anybody. You just simply, there's no time zone restrictions. You can learn anytime, anywhere across the globe. You just put your question. If you are not clear on any of the concept further while your e-learning course is ongoing, if you have doubt about any information, if you're not clear, you just put your question in the prompt. It will exactly tell you what this particular information that you're looking for. Last but not the least, we are done with the tax evasion and tax avoidance. I'm dropping a link in the description to a 1-page infographic that summarizes everything we covered today. Feel free to download it and keep it as a reference. There's one additional thing I also provided there. I didn't discuss much into detail here, but I wanted to give you that additional piece of information there. And the next video is about fraud, how fraud generates criminal proceeds, the different types of frauds that CAMS exam tests you on, and how fraud and money laundering connects. So subscribe so you can catch it. I'll see you in the next video. Thank you so much.